Hi everybody, Alex Employer from Expert Forex, and today I ask the question, is low trading account leverage a problem for you? It is a huge problem for a lot of people. And when we talk about low leverage, for instance, the US has reduced their leverage to 50 to 1 and in some cases 20 to 1. In the UK, and I'm not sure about Europe, but 30 to 1 is the leverage there. And in Australia, the leverage is 30 to 1. But in general, it used to be and still is available 100 to 1 to 1,000 to 1. So that's the international situation about leverage. Now, interesting enough, the countries with the worst deal in terms of leverage are in fact our biggest customers. You can see there the United States is our biggest customer, the United Kingdom is our biggest customer there, and thirdly Australia. So it shows you that clients are getting around the leverage problem quite well. Now at this stage you must be asking, what is leverage? What is margin? What is all this all about? Now I did do a great video a while ago, and here it is on your screen. Please go and watch it. It explains leverage, explains margin, and there are more videos that I've made. All you have to do is go to YouTube and search for Expert Forex Leverage and you'll find a couple more. So in today's video we're going to be looking at 9 ways traders overcome the low leverage problem. So the first way is basically just to increase your account balance. Now this is quite ironic because the legislation was there to reduce risk for traders, but in fact they have to increase their account balance. So here's the problem. You have a linked account requirement and the account for an account balance of $1,000 and the leverage of 100 to 1, but you only have leverage of 30 to 1 that you get from your broker. So the solution is you would need to increase your account size by 3.3 times to $3,300 to have the same protection provided by leverage. And why you need to do that adjustment is that both accounts will experience a margin call at the same time if you do this particular adjustment. How did I calculate that 3.3? Basically your account size times leverage needed divided by the leverage available. So that's the mathematical equation. So you would divide 100 by 30 and you get 3.3, and you'd multiply that by the account size, and that is where that comes from. So you can use this formula. All you need to do is change obviously whatever you need, but you can use this formula to calculate your increased account size requirement. So that's one solution. Okay, so next we're going to look at the decrease your lot size solution. So we have a linked account of $1,000 that trades a minimum of 0.1 lots using 100 to 1 leverage. You get 30 to 1 leverage. The answer is you need to trade a lot size of 0.03 to compensate for low leverage. So the calculation again, this size is the 0.1 lots divided by the required leverage divided by the available leverage. So again, you've got 100 over 3, and you multiply that by the lot size and you get 0.03 lots. So basically you'd reduce your lot sizing to compensate for that. Now there's a potential problem, because if that calculation goes below your broker's minimum, and let's say most brokers have a minimum of 0.01, let's say that calculation goes to 0.0075, there are two things that you can do. You need to round up to the broker minimum and trade it with more risk, so you have a little bit more risk, or again you increase your account size, and the formula is shown here, and you'd have to increase your account size to 1,333. So as you can see, this is a combination of solution 1 and solution 2 together. Then the next solution is don't use multiple open trade strategies. So in other words, whatever strategy you're going to be trading, have a look if it generates lots of open trades at the same time. Go for strategies that only generate 1 or 2 open trades at the same time. That will reduce your requirement for margin and reduce your exposure to low leverage. Now we have a number of trading robots where you can set the number of open trades to only 1 or 2 in our portfolio of robots, and that is a way that you get around that. Obviously your income will reduce tremendously. Then the next point is use day trading strategy. So a day trading strategy is you wake up, you trade the market, and at the end of your session you basically close all your trades. So it's a day trading session. And we in fact have some fantastic robots. It's called the Make Money Day Trading Robot, specifically produced for prop trading, where prop trading have daily limitations in terms of drawdowns and profitability and that type of thing. So we've created this robot for prop trading, and it allows you to start trading at a certain time, stop trading at a certain time, and close all your deals at a certain time. We have a similar robot, the Trend Trader, does exactly the same thing. It allows you to day trade and have a closed situation at the end of the day, because if you're closing your trades regularly, your demand on margin and your demand on leverage reduces tremendously. Then the next solution is trade manually with limited open trades. So that's slightly different to day trading. When you trade manually, you can also swing trade. You can keep trades open for 2 or 3 days, but manual trading is also good because it reduces the volume of trades that you tend to do. And as long as you keep it to 1 or 2 open trades at any one time, manual trading is pretty good. Manual trading is also very good for prop trading, and that is also why the people that succeed in prop trading are mainly disciplined manual traders. Then the next solution is use international brokers. Now, as you can see from our client statistics, there must be hundreds of clients that are using international brokers because their countries do not provide the leverage required to trade our robots. I'm not going to go into this one in too much detail, except that, for instance, I am based in Australia. I use international brokers and I get up to 1,000 to 1 leverage from my broker. Then the next point is use cent accounts. Now, cent accounts are special accounts. What happens is you give the broker $100. He says, no, I didn't receive $100. I received 10,000 cents. In the account, although you've only given the broker $100, the broker will show your account to have $10,000 in it. And that allows you to get past the increased account balance problem and the decreased lot size problem. Now, there are many cent accounts available. You'll have to do research on your side. I know, for instance, FBS has stopped doing cent accounts, but there are a whole lot of others that provide cent accounts. You'll have to do an internet search to find cent accounts suitable to your particular needs. Then there are other creative methods, and again, I don't want to go into these in too much detail, but for instance, if you open an account in Australia and they have a funny little question that says, are you a professional trader? Now, a lot of people say no, but if you say yes, it opens up a whole new opportunity in that you are then not limited by leverage and margin. You can get internationally competitive margins and leverage. Now, don't hold me to this particular one, but I know of a lot of traders that have used it. Then there's a combination of some of the above methods. So you would basically use a combination of any of these methods. You've already seen us use number 1 and 2 together, but you can use a combination of these methods to overcome the low leverage trading account problem. Now, in this part of the video, it's over to you. Please like the video if you've liked it. Please subscribe. This is likely to be a new channel, so please subscribe to that channel. Ask questions if certain points in the video were unclear. Add to the content in this video. If you've got some ideas of your own on how to overcome leverage, please add them in the comments. And then also suggest topics for future videos in the comments of this video. As always, links to anything mentioned in the video will be in the description of the video as well as in the first comment of the video. So from me, Alex Eploy, cheerio.